Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining me is Janet Alvarez, Executive Director, WiseBread, to discuss financial planning and budgeting in an inflationary environment. And Janet, it is great to see you. Welcome back to Trade Talks.
It's a pleasure to be here. Thank you for having me again.
You got it. And budgeting amid rising inflation requires foresight and planning. Everyone should be updating their budgets based on rising prices. You know, the good news is that there's time to, negotiate around your debt and your jobs. Tell us more about that.
Absolutely. There is time to negotiate. And really, during times of rising inflation, one of the things that you have to be worried about is rising interest rates, right? Especially now that the Fed is raising rates. So that means that the rate increases might be seen in your credit card bills, for example. So now is the moment to try to lock in lower interest rate on any debt that you owe. So it's a good time to try to refinance your home. If you haven't done so already in the past few years, this is probably your last chance. If you have credit card debt or other consumer debt, it is your last opportunity too to try to lock in the lowest rate possible, because those rates will likely rise and that'll have exponential effects upon your budget.
And Janet, it's so interesting. We're seeing wages rise. We know that the labor market is tight. Everyone's competing for talent. Is it a good time to negotiate a raise or even think about switching a job?
It is imperative that you negotiate a raise. And if your pay has not increased significantly over the past couple of years, you're falling further behind because of inflation. And as we know, wages are rising, right? This is the fastest that wages have risen in many, many years. So this is a prime opportunity to do so. And if you're not able to negotiate a higher wage, then join the Great Resignation is my advice to you. Seek out a new job, a new source of employment that will give you that pay increase that will allow you to maintain momentum with inflation.
You know, Janet, it's interesting. I was talking to someone the other day, and they were excited that their student loan payments were extended for the pause. My comment to them was, well, you know what? If you have the money, you might want to think about paying it, or at least saving for one. You're going to have to pay the piper at some point. Do you think it's a wise thing to pay, even though it has been extended?
So there are a couple of ways of thinking about it, right? If you don't have an emergency fund in place, if you have virtually no savings, my advice to you is that you build an emergency fund before you pay more than your minimums on your student debt. Because the worst situation that you can be in is one in which you have student debt and you don't have any emergency savings to fall on. Remember that most student debt, if it's federal in particular, can be placed on income-sensitive repayment programs, such as income-based repayment or pay-as-you-earn, so that if you have no income or if you have low income, your payment is set to zero. So you don't really have to worry about it. However, if you're unemployed and you don't have any savings to fall back on, there are no recourses really that you can draw upon. So my advice is, if you're in a stable financial situation, if you have emergency savings, if you have low consumer debt in general, yes, pay down student loan debt aggressively. If you don't have emergency savings, if you have a lot of consumer debt, if your financial situation is more precarious, hold on to your cash and enroll yourself in pay-as-you-earn or income-based repayment instead, to keep your student loan payments as low as possible while you strengthen your personal financial situation.
And we saw this week the 30-year fixed mortgage go up over 5%, first time I believe since 2011, except for that small blip we had in 2018. Do you recommend refinancing at this point? And then what do you do if you're a first-time home buyer?
Well, I mean, like I said earlier, this I think is your last chance to refinance in anything, remotely reasonable. So if you haven't refinanced and you are in the market to refinance, this is your last chance. It isn't the best opportunity, isn't a good opportunity, but it is your last chance. Second, if you're a first-time homeowner, this just is not a favorable market. And I know that a lot of personal finance experts like to equivocate on that matter. They like to tell you, oh, but it can still be a good investment, or it depends on your personal situation. Unless you're flushed with cash, unless you are really extremely committed to becoming a homeowner now is not the best moment. There are a lot of factors that go into that, but very likely the home market is going to soften a bit over the next year due to rising rates and due to the supply situation.
Yeah, and it's interesting that you brought up supply. At some point, there's going to be demand destruction. I mean, even first-time home buyer market, that sub $500,000 level, there's nothing. I was at an open house for a project I was working on. A first-time home buyer home, 2 days, over 100 people just to see the house. And it was in the snow. They had lines around the house waiting to get in. It's going to get to a point where you just can't simply buy a home. And then between that and rising interest rates, perhaps we'll see the housing market normalize so that first-time home buyers will get an opportunity at some point.
Absolutely. I mean, I think my prognostication, my personal view is that demand, it won't crater, but demand is going to soften significantly. And not just for homes, but for consumer goods in general. these prices are not sustainable. The inflation level is not sustainable. Consumers simply cannot keep up with their wages right now. So there's going to have to be some softening naturally, whether it takes the form of softening in demand or whether it takes the form of a full-blown recession, I don't know, but that softening will have to occur.
All right, Janet, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.